Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Market's getting ready to key in on yet another earnings season, which opens up later this week. And we're going to try and gauge for you what the market's reaction might be. We're going to do that with our research director, Shiraz Mian, equity strategist Dave Bartosiak, and ETF strategist Eric Dutram. And Shiraz, I'm going to start with you since you are the go-to person with regard to all earnings trends. You know, there's people on both sides of the argument. Some say that the next few weeks are expected to be okay for earnings, and hence the market. Others are saying maybe a little gloomy for earnings, and hence the market. What do you say?
I would say that both camps could be right. The way both could be right is that estimates have fallen enough. In fact, they have fallen more than what we had been seeing in comparable period over the last 4 or 5 quarters, that it may be easier for companies to jump through them. So positive surprises on earnings and revenues could be a bit more numerous this time than what we have been seeing in recent quarters. On the other side, it's not so much about positive surprises for Q1 estimates. My sense is that the market has effectively kind of conceded this as a washed out quarter. They see and look at Q1 as the low point for earnings for 2014 and are looking ahead to Q2 and the rest of the year. And on that front, if we see continued negative guidance as we have been seeing for more than a year now, then we'll see estimates for those quarters come down, and that could be a problem.
Okay, Dave, you think that these earnings that are going to be reported in this season are going to be more to the market than they have in past quarters?
Yeah, I think more than the last several quarters, we're kind of looking for guidance, and that's where we're going to find it is in the earnings reports because, from a technical perspective, we're just kind of bouncing around. So the market seems to be looking for something that's going to drive us in either direction. So I think these earnings are very important.
So you're in the guidance focus camp as well?
Well, earnings and guidance, you obviously can't argue with the guidance.
Okay. Mr. Dutram, you think earnings are actually going to drive the market here through the season?
Definitely, and I'm also very concerned about guidance because I do believe the market might kind of look past this past quarter given the weather and some of the other issues, and it'll be important to see if companies can kind of bounce back from this. And in particular, I'm going to be taking a close look at technology and financials. Financials have been very strong in quarters past, but they're not looking quite as good this time around. So it'll be interesting to see if they can sort of provide a new round of momentum for the market. And then technology, given how terrible a lot of these stocks have performed in this corner of the market, a lot of investors will probably be looking for solid earnings from these companies to kind of, alleviate some of the concerns a lot of investors have had.
Dave, give us a quick rundown as it pertains to the market. What are the technicals telling us right now?
Right now, we're bearish in the short term. On Friday, that was kind of a big day where we took out the highs of the week, and then we came way back down and basically had this bearish engulfing sort of candle that took place on the S&P 500. Now couple that with the Russell 2000 selling off for most of the week, or toward the end of the week at least, and then today we have that too. So everything's kind of getting dragged down. So I wouldn't be surprised if we saw in the short term, the S&P 500 dip below 1850 today. Even I don't know where it's at, and further to the downside to 1800 is really not that far away.
That Russell 2000, is that a warning sign for you?
I think it is because that's the higher beta names, the more volatile names are going to be inside of that Russell 2000. That's where people kind of go for the growth that's going to the upside, the stock stories that are fantastic. They make a ton of money, and when things start to get a little shaky, they're going to pull out of those stocks. They're going to go to the higher quality names, and you're going to see the Russell sell off prior to a huge S&P sell off if it takes place.
Eric, if there was a warning sign out there that you needed to put your finger on, what would it be?
Well, I'm also going to be looking at the Treasury bond yields and other rate information like that. It's going to depend on what the Fed does over the next couple months here. But I think if rates start to trend back higher, say if Eastern Europe becomes much less of a concern, that could really hit a lot of dividend stocks. And these stocks have been among the best performers so far in 2014. So if we see that rise back in yields, one of the top sectors could be really hit, might be really bad for investors.
So Shiraz, if the Q1 earnings reports are going to come in weak, is that going to be, in your mind anyway, a warning signal for the market, or does that cross over to danger signal if the guidance isn't what you expect it to be?
Both. I think on the actual earnings front for Q1, if companies can't beat even these beaten down estimates, then that is a warning sign. The guidance issue is more a search for whether we will start seeing some improvement on the trend that's been in place for more than a year now. The issue is even if it's not positive guidance, will we see some improvement? These guys mentioned technology and financials. Technology, particularly, if we start hearing from these legacy firms on the capital spending front, for example, that they see signs of improvement. If we see from basic materials, consumers, and industrial firms some signs of improvement, even if it's in the second half, that will be an improvement, and that could provide some support for the market. If not, I don't really see how we can sustain the gains that we have had over the past year. All these gains were in anticipation of a recovery in earnings growth, and this is now high time for that growth to start showing up. If we don't see it, we are in trouble.
All right, very quickly, what about the last jobs report that came out? Anything stand out to anybody here?
I think it was overall positive. It reconfirms that the economy had a soft patch primarily because of weather, and as the temperatures are thawing, we are seeing some improvement of that and some effect of that in the data as well. The improvement and the pace of improvement is not as fast as many of us would have liked, but there is improvement.
All right, thank you all for that. Hopefully we've put it all in perspective for you up to the point that we're at in time, and hopefully we've done a good job with that, given the information that's out there. Now, what we hope they'll do a good job with, and I don't have any doubts in my mind, is giving you their top stock picks for the week. That's in our next segment, so click on over.